Very kind introduction. I know it's been a very long day and we have all been through very intensive discussions. I really hope that whatever I have to say over here is interesting and useful for you. In the pack that we have kept on your desks, there is a very short anecdote on the origin of hedge funds. Hedge funds clearly a very important component of the assorted world of various products collectively labeled as alternative investments. What I found interesting when I actually took that and put it down over there was that this was done about 65 years ago when a gentleman by the name of Alfred Jones started this concept of creating alpha through the use of derivatives, through the use of leverage. Pretty much many of the concepts he spoke about and actually implemented remain the same today. Therefore, he invested his own money, which we today call skin in the game, and we also collected performance fees. Very much the 220 fashion that we are all very familiar with. A lot has changed since then in terms of the range of asset classes, in terms of the range of alternative strategies that are there today. But again, the core of the whole proposition, it pretty much remains the same. In my presentation today on the role of alternative investments in HNI portfolios, I look at it in three parts. The first part, we look at the historical allocations to alternative investments in global portfolios and also in Indian portfolios. In part two, we look at does alternative investment make any sense to the Indian investor at all? And in part three, if so, what kind of allocations are we talking about over here? So let me just jump in immediately. This is something where we talk about the difference between traditional and alternative, and a lot of us know about most of what I say over here, but I thought it's very important to bring it up here because investors in India have hitherto been exposed only to traditional investments, and therefore understanding the real difference in terms of what alternatives can do in their portfolios, it is very important, especially from a product evaluation point of view. And a lot of the panelists earlier spoke about that as well in terms of the specific fund manager contribution in alternative investment products. Because a lot of the performance is actually derived from fund manager skills as against in traditional investments where it's the asset class performance which largely rubs off on the performance of the portfolio. Let me now quickly go into the first part. This is based on a survey done by Capgemini where they have surveyed 4,400 odd investors around the world and across various regions, and totaling to assets of about $46 trillion. A large part of this is, of course, predictably US assets, and surprisingly Asia comes in a very close second at 26%, just after US at 27% of the assets. If you actually strip out the real estate part over here, and I'm sorry the colors are not too very differentiated here, but the 26% allocation that you see is real estate, and if you were to actually strip that out, the rest of the portfolio is broadly wealth preservation 55, growth oriented assets 45. That's broadly the global mix. But then dig a little deeper and the trends are very interesting. There is huge regional disparities in terms of how actually clients have built their portfolios. For instance, American investors have been very, very positive on equities. So therefore, 37% of their portfolio is into equities. However, Asian investors have not been so positive on equities, with just about 22% allocation there. Even within the alternative investment space, you see a fair degree of difference in terms of how clients have actually approached that space. So therefore, American investors, North American investors, the real estate exposure is just about 14%, and we all know about how Indian investors and the liking for real estate. And that's not only, mind you, true for Indian investors, that's true for Asia Pacific investors as well, because a significant 25% is invested into real assets. Globally, what is the product class that people have typically shown preference for? Structured products and private equity come in right there at the top. And amongst North American investors, a whopping 27% of the alternative investment space has gone into this particular asset class, product class. What's been the global experience here? And we heard a few panelists talk about that in the morning. And Ramesh actually spoke about it, that there's been a huge amount of money flowing into emerging markets, especially after the crisis. A lot of this, while one would like to think that it was for portfolio diversification, I suspect that a lot of this is the chase for yields, because interest rates in the US and most of the mature markets actually came crashing since the crisis, immediately after the crisis. So a lot of this seems to have come into the emerging market space, actually in pursuit of higher yields. But over a period of time, while flows have been good, the portfolio allocations have pretty much remained stagnant. What's it that, this is again basis surveys that have been done, what's it that clients are actually looking at in terms of this space and what are their expectations? I think the huge divergence in performance over a period of at least in the last 5-6 years has meant that clients are far more discerning on manager selection, and rightly so, given that in this space that's very important. Somewhere there is a toning down of return expectations that has happened, and people are really not looking at fund managers who are shooting for the stars. They would probably go with people who are giving some kind of consistent performance over a period of time. Turning to the Indian HNI portfolio, there is a 16% allocation to alternative investments. Again, this is from the Capgemini report yet again. And I should probably qualify this and say that what is the definition of HNI here? Anybody who has a net worth of over $1 million, excluding the primary residence. And typically there is an 80-20 rule that applies over here as well. So therefore, 1% of the clients, less than 1% of the clients are more than $30 million. And they contribute a substantial part of the assets, if you were to see. In this space, there is a 20% allocation, so therefore about 3% of the total portfolio is going into private equity kind of ideas. And I suspect a lot of this is to do with real estate funds, because this is broadly classified under private equity. And a lot of it is also got to do with trade investments, especially among the bulge bracket HNI investors. Similarly, there should be a fair degree of sprinkling of gold as well in this portfolio. One very interesting observation, and I'll go back, is the cash exposure that we have seen in Indian portfolios over here, and that is something that's been seen across Asia. Now, I don't know how much to go by what they are saying, but it does seem to reflect the fact that a lot of the Asia Pacific investors, the cash exposure in the portfolio has been high in the recent past. Turning quickly to what's the landscape that we have seen in India, and I think here is where I'd like to make a distinction between alternative assets and alternative strategies. Typically, we tend to use it very interchangeably when we talk about alternative investments, and therefore, I'd like to bring that difference up over here. What we see in the quadrants is the alternative assets class space, and the boxes around actually are the alternative strategies that we are talking about. If you actually were to look at this, you get a sense like, some of the panelists were mentioning this earlier, a lot of pretty much what is there in many parts of the world is already existent in India. I'll just give you an example over here. The top left quadrant talks about feeder funds, funds that invest into global themes, global ideas. I'm only talking about mutual funds. Now, why is this being classified as alternative investments? Simply because of the reason that correlation with global themes vis-a-vis Indian traditional assets is very low. Secondly, you get a straightaway rupee hedge over here. So therefore, that space, if you were to look at, it has seen very little interest amongst investors. And here I'm not talking about HNIs, I'm talking about investors at large. The second space, we all know about, we've heard a lot about that today. And in particular over there, we've seen the last couple of years, a lot of interest in real estate structured debt in particular. I jump to the fourth quadrant where, it's the conventional underlying that we are talking about over there. There we have essentially seen a splattering of many ideas, many strategies, quant, momentum, fundamental quant, and what have you. But I guess the experience on all of those has been very, very mixed. I think what has happened is that there has been some bit of a strategy failure as market cycles actually turned. In the last space, very recently you've seen some bit of opening up over here. In this, the most prominent and understandably the most prominent one there is the gold ETF space. Now, just to give you a sense of how some of this stacks up relatively, the gold ETF industry in India today is at about nearly 10,000 crores. Whereas the entire pack of all the feeder funds that invest globally is just about 2,500 crores. So just gives you a sense of how that remains a very underexplored kind of area insofar as Indian investors are concerned. What's been the experience in alternatives? I think you've heard a lot about that today, so I just don't want to labor that point again. But I think a lot of this has to do with, again, differentiating between the two, alternative assets and alternative strategies. I think what we have seen in the last few years is essentially a lot of alternative assets, essentially private equity and real estate. Blame it on the environment, blame it on other things that all of us know. But then the experience over there has seemed to be different. That debt is various strategies. It's stuff that we all do in our jobs every day. I think it's very important. A lot of the historical averages which focused on